Okay, Dr. Mathai, welcome to the show.
Thank you very much. Nice to be back here.
Right. To begin it, I would like to ask you, what's your reading on the Sri Lankan economy now?
I think actually we have had and we continue to have a very bullish outlook on Sri Lanka. Certainly over the medium term and even in the short run, we've seen 2 years of steady growth, 8% growth. We've seen inflation coming down to very low levels. We've seen the fiscal deficit improving dramatically and the debt ratio coming down. Now over the last 6 or 8 months, there was this concern about the external current account, that is to say the trade balance and other international flows of dollars. Really a byproduct of the success of the economy. The economy was growing so fast that even though exports were doing well and remittances were doing well, imports were growing even faster. And as a result, there was a shortfall of dollars in the economy. And now what the central bank has done is they've taken some, central bank and government, they've taken some very bold steps to correct that situation. So I think we're feeling quite optimistic about things.
It means we are in the right footing.
I think these policies are definitely ones that will make the economy more stable, make the growth more sustainable. At the same time, obviously, the policies have a real impact on people. I mean, somebody in my office was telling me how much extra it's costing for the school vans and for the bus fare, and for now there's talk about the gas cylinders going up, the bread has been increased. Certainly there's a real impact on people. But at the same time, something had to be done, because we had a situation where reserves at the central bank were declining quite at a rapid pace. We had a situation where the CPC was losing a lot of money on every litre of diesel and kerosene that they were selling. Some adjustments had to be made. That was the reality of it. So now we're happy that they've been made.
Okay, they did the changes. It means that the exchange rate was relaxed, and then now we see some rush in the market. It means rupee was going down steeply. So what should we
Well, I think it's an excellent question you've asked. I think whenever there's a change in a market, things are not perfect. There's always going to be a little bit of disruption for a little period. Things should settle down after a while. I think what we're encouraged by is the idea that we no longer have a situation where the central bank is trying to keep the level at the rate at a certain level. Rather, the central bank has said we are going to let the market forces speak. Of course, we'll step in if there's some excessive volatility. Nobody wants that to happen. But subject to that, basically we're going to let market forces speak and let the rupee adjust to where it needs to. So that means that, and this general approach of flexibility is one that we are really very happy to see, because it means that if conditions change, well, the policies can change also. So going forward, in practical terms, if the current account deficit takes some time to respond, and if the reserves continue to fall, well, then there may be a need for the rupee to get weaker. On the other hand, equally likely, if some capital flows come into the country, it could be that the rupee strengthens. It's hard to tell which is going to happen. And we at the IMF, and I think at the central bank also, we don't have any particular view that the rupee should be at this level or that level. Rather, what we think is, let's focus on how many reserves are at the central bank, how much is the reserve coverage at the central bank. Let's try to build that up to a good number. And the exchange rate can move in a natural way depending on market conditions. So,
but it needs to be stabilized at somewhere.
Well, I think that's the point. I think there's a balance between importers and exporters, between those who are providing remittances, debt service payments, all these inflows and outflows in the economy. That will naturally yield a level at which the economy where the natural forces of the market say that it's appropriate for the rupee to be at. And I think it takes a little while to get to that level, but that's what we're working towards now in the market.
Doctor, if I say that the imports are too much for a country like Sri Lanka, so what are the steps we can take to minimize that? It means the import bill. You
know, the import bill, in a way, one doesn't want to minimize imports at all, because many of those imports were very productive and very meritorious imports. Think about it. You have petroleum that's being imported. Without petroleum, the economy can't go. People can't function in their ordinary lives. There were lots of imports of capital goods, machinery, intermediate inputs for materials, raw materials even. Inputs of productive things going into the productive processes of the economy. Those also shouldn't be stopped, otherwise growth will be stopped. And even consumption imports. I mean, if you think about it, vehicle duties were so high for so long, car prices were so high, that naturally there was a pent-up demand. Ordinary Sri Lankan consumer would want to purchase a car, and now finally it's more affordable. So it's natural there should be in some imports, and we don't want to kill off that as well, because the consumer should be able to benefit as well. So all that is true, but as you say, these imports have to be financed somehow. So if the exports are not providing enough money and the remittances are not, and the capital flows are taking a little longer to come in than we had expected, than that people had hoped, well, then some steps have to be taken. So what are those steps? I think what we're happy to see is that the central bank has not taken one step, but they've taken many steps. So first is this exchange rate flexibility, which will, maybe with a lag, but it will certainly provide some boost to the export sectors, to the import substituting sectors. It will also reduce the amount of imports into the country. You've also seen monetary tightening. Central bank, for the first time in 5 years, you know, raised policy interest rates by 50 basis points. And they also said banks which were previously extending their credit by 34%, that was the growth rate last year, that should come down to some 18% in that range. So when the credit flow is reduced, and we're not talking about reducing it in a very extreme way such that the economy can't grow, but reducing it in some moderate way, well, that also, the credit will not flow as fast, and the consumption and the imports also can be pulled back to a more sustainable level. So that should help on the import front. And then the third thing, of course, is the fuel prices and energy prices, electricity prices. Those being raised, they can also help on the import bill, both fuel and non-fuel import bill.
Then, Doctor, one important question. What is the situation with regard to IMF standby arrangement in Sri Lanka?
That, of course, is a good question to ask when you've got IMF guys sitting here. I think for a long time, we were not focusing on the program at all. I've said this in other interviews, but it really is true. We were not focusing on the program. We were focusing on, look, there's an economic challenge here. What are the best policies to address that challenge, to turn the current account deficit around? And now they've taken those steps. We're very happy to see. And the natural question is, what does it mean for the program? So we're working towards it. I think the central bank expressed in the last couple of days that they are keen on going forward with the reviews under the program, and that we're working towards that. And right now the discussions are ongoing. We're trying to figure out the implications of these policy steps for the economy, and then what that all means for the program. And hopefully we'll move forward pretty expeditiously.
Positive directions.
Yeah, I think so. Definitely positive.
All right. Then, Doctor, there's accusation by many sectors of the society saying that recent price hikes were a result of IMF pressure. So what's your view on that?
Well, you know, I think it's a bit misplaced, that idea. Because really, when you have international oil prices going from $75 to $110 or more, clearly something has to adjust. We can't keep prices at the fuel shed the same if the cost has gone up by almost 50%. It's just impossible. Of course, it is always possible. You can keep the prices where they are, and then the CPC will run yet larger losses. The government will run huge losses. How do they finance that? Ultimately, what they have to do is they have to print money, which would create inflation for everybody. Or they would have to borrow like mad, in which case there wouldn't be any borrowing left for the economy. Interest rates would go up, jobs couldn't be created because firms couldn't expand their operations. There's a real consequence. Of course, it would be good to keep the prices as low as possible, but it also has to be affordable. And if it's not, there are real consequences for the economy.
Then, Doctor, central bank was saying that Sri Lanka would see a growth of around 8% this year as well. But it will be pressurized now, no?
Yeah, you're right. It will probably come under some pressure, because these measures many of them will have negative impact on growth in the short run, but some of them will have positive impact on growth at least after a while. I mean, the exchange rate depreciation that we've seen should probably help the exporting sectors. Will we reach 8% this year? I think originally we had predicted 7.5%, so we already were a little bit short of that 8%. There may be some reduction from there, but I think one thing that the governor has said many times is that when you're starting from a very high growth like 8%, if it goes down to 7 or 6%, you know, that's okay, that's manageable. If you're starting at 1 or 2% and you go down, that's not so okay. So I think in that sense, it's probably a good time that we've taken this measure. In the same way, you may ask, what is the impact on inflation? We've got very low inflation. Maybe the next question is that. See, I'm learning what you may ask me. Well, if the inflation, certainly when you raise the prices of some of these key goods, there will be an impact on inflation. But the good thing about it is that we are right now in a very low inflation period. It was 3.8%. It came down to 2.7%, I think, in February. Yeah. It was just announced a day or two ago. And absent these price changes, maybe inflation could have gone even further down. Yeah. I mean, to extremely low levels by Sri Lankan standards. Yeah. Frankly, even by developed country standards, quite low levels of inflation. If you have to do these kind of adjustments, which are unavoidable, it may be good to do them at a time when the inflation is already so low, when the harvests are coming in well, when food prices are down. So,
yeah, Doctor, my final question. What is your personal view that what's the way forward for Sri Lanka now, economically?
Well, I think that I think macroeconomic stability is a key thing. That's the foundation on which success can be built. And the policies they've taken go absolutely in that direction. Now, looking further out into the horizon, how do you sustain this rapid growth over the medium term? I think Sri Lanka is positioned very well right now, and there's certainly the prospect of getting that high growth, maybe even double-digit growth if things go well. But some policies adjustments probably are needed. I think one key thing is regional integration. We've had exports declining steadily in this country relative to the size of the economy for 15 or 20 years. Turning that around is key. And how do we turn it around? Sri Lanka is located, well, the location of Sri Lanka has not changed, but what's happening economically around us has changed dramatically over the past 10, 15, 20, 30 years. China is growing like crazy. India is growing like mad. Taking advantage of those export markets. Right now, India commands only 5 or a little more than that % of total Sri Lankan exports. China, only 1%. Developing closer relationships, expanding the free trade area and goods with India, broadening it so that we can have a services agreement as well, of whatever kind, whether it's CEPA or some other kind of agreement, in order to have more integration with this huge country, this huge neighbor to the north, seems like a sensible thing to do, because it's a great opportunity for Sri Lanka.
CEPA is a controversial issue.
Of course it's controversial, and that's why I say, you know, we don't have to get hung up on, oh, it must be CEPA or it must be this particular agreement, but the general principle of the idea that neighbors should be able to trade with each other, that there's a very large country that's growing fast, it should be able to provide opportunities for Sri Lankans, creative Sri Lankans, to export their goods and services to that country. That's just the general principle that I'm trying to get at. So boosting exports is one thing that should help growth in the medium term. I think another one is continuing to build up the physical infrastructure. And the government deserves a lot of credit for protecting an envelope in their budget for public work. But there also probably is a need to bring in more private sector investment. I'll just quickly end. Human capital development. Here, it's not just enough to say we've got a literate population. There needs to be English skills, IT skills, more university education. Some very good steps have been taken. And the last maybe would be financial market development, because a long-term finance is not very available. There's no corporate debt market here to speak of. Developing that would be a wonderful thing. All these steps, if taken, and especially if taken in some kind of consultative way. Too often, I think, in Sri Lanka and in other places, there are policies which are devised without a lot of discussion, public discussion and debate. And perhaps if that can be done, there will be more buy-in from the people, and you can go forward with some of these policies that will secure the growth for the country over the medium term.
Thank you very much, Dr. Mathai, for your time.
Thank you. It was a real pleasure.
Yeah, thank you.